All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about two AI ETFs, which you could potentially buy for high dividend yields and high income. And in this video, what we're going to do is we're going to go over both NVDY, we're going to go over the underlying business. I have the business kind of websites up here. What we'll do is we'll go over the stock price chart history, as well the Yieldmax version and the financials of both these two AI ETFs. We're also going to be looking at AIYY. This will be the second one, and they both boast huge dividend yields. AIYY with a 101% dividend yield, and then NVDY with a 65, almost 66% dividend yield. So we'll be going through the company pages for both these kind of underlying companies. We'll look at the financials, the stock price chart histories, and the Yieldmax ETFs. And at the end of this video, I'll decide kind of which one I would prefer to buy and which one I suit best for each kind of situation that you were to invest in. So if that does sound good, I'm going to keep your comments in mind. I really appreciate you guys commenting. I thought this comment was kind of funny. Wade Hollywood said, "Isn't it funny? All ETF stocks are paying dividends right now." All ETF stocks are paying dividends right now. Yes, Misty, SCMI, Coney, NVDY are the best. So he's thinking the best Yieldmax ETF stocks are paying right now. Misty, Coney, NVDY, absolutely huge dividends. I couldn't agree more. And I do agree with you guys that I do flip back and forth way too fast between tabs. So I'm going to do my best to control myself and control kind of exactly how I go about that. So I will do my best. I'm listening to you guys here. We're currently up to 6,512 subscribers, 396 subscribers in the past 28 days. The last video was fantastic, our best video yet. So I want to say thank you to all the new subscribers who joined our page and all the old ones who've been OGs and have stuck around through the thick and thin. So today, I just have my margin portfolio out. We're not really talking too much about my portfolio. You can see kind of some gains and some losses that happened today. Very cool, very cool. But the majority of what we're talking about is these two AI ETFs and their underlying stocks. First, we have NVDY, and both NVDY and AIYY, Yieldmax does not own. They state very clearly the fund does not invest directly in AI or in NVDA, and that's just because that's how the Yieldmax strategy goes. They're no different from all the other Yieldmax ETFs. But first, I want to talk about NVDY. It boasts a 66% dividend yield. When we go down here to the dividend distributions here, you could see they've been doing very well. They've been a pretty good dividend payer for Yieldmax, kind of starting out a little bit slower, but then you can see here they just exploded as the stock price, the underlying stock price exploded back in February, and the dividend yields have been pretty insane since then, as you can see here with the stock price absolutely exploding and then of course falling once again. Nvidia has been known to have some sharp falls, which, you know what, it's been a pretty good Yieldmax ETF considering that, but when it falls sharp, you could see the Yieldmax ETF also does fall very sharp. But nonetheless, it's had a fantastic rally. It's kind of had its up and down periods, as every stock does, and it's continued to trend up over time. So it's been a fantastic performing investment. It's a $3.41 trillion company, a huge market cap. And when we look at the underlying business and we see the applications, we understand why people are so bullish about this company. But do the financials really state that it should be a $3.4 billion company? In my opinion, no. I think it's overvalued. Currently, I'm not necessarily huge in AI, so I'm just kind of presenting the information to you today, but that's my personal opinion. When we look at their business model, when we look at their company, we can go to their body of work. Nvidia really does a lot. It's pretty cool to see, and if we hit down here to explore, they're definitely more in the kind of like digital space in my sense, with the iPhone and computer chips and things like that, when comparing to our other ETF, our other kind of AI company, which is AIYY, or AI, which is C3.ai. That's the company name. But Nvidia is more in kind of the computer chip space, but their applications are pretty crazy. They go from the iPhone to healthcare to you have as well electric cars and computer chips in cars. So they have a lot of applications, Nvidia as a company, and they're really kind of pushing the barrier here. They're, in my opinion, this is really where the market cap kind of comes into space. And I wish I could really show you some products and stuff like that. This is actually a pretty good kind of thing that I can show you here. So you can see there in multiple different kind of areas. We have computers and laptops. I think they're in PCs. And if we look at here, what I do want to do is go to their investors page. Awesome. But it's really cool to see kind of what they do. Nvidia, it's kind of a great area for me because I'm not huge in the AI space, but they are a world leader in that space. And what they basically do is they gather a lot of data and then help to have businesses optimize either their products or their services around that data. And currently, if we kind of look at their financials, which is something that I'm a little bit better at doing than kind of tapping into what NVIDIA does in terms of AI, we could see here that they're a fairly fast growing company. And just even within like the past, past year, the past 12 months, you can see that they've actually doubled their total revenue. And in turn, their operating income has also pretty much doubled, which is fantastic. Doesn't necessarily say that they should have gone from a 1.5 to a $3 trillion company. I'm not sure. But what you could see here is we look at their balance sheet as well. Their balance sheet doesn't have a huge amount on it either. I'll go to quarterly for the best kind of results here. It's been growing quarter over quarter and very fast. But this is $96 billion. You got to remember, this is valued at a $3.4 trillion company. There's obviously a lot of hype around Nvidia, and there's a lot of people that are bullish on its application for the future. And I think that's really where the stock price and the run up has come from. And when we look at the Yieldmax ETF, it's performed extremely well over the past year. You could see up 12%, and it's been paying out huge dividends. We could say NVDY has been paying out roughly 100% in terms of dividend yields, if not more. And I really should have had the total return for Yieldmax up on here, but I'm definitely sure it's over 100%. NVIDIA has performed extremely well, and NVDY has followed in its footsteps. It's, in my opinion, when looking at these two ETFs, when we compare, I think NVDY and Nvidia is a lot safer of an approach to an AI stock, just because of course, its huge market cap, but as well, it's an established company that's profitable, that's clearly profitable, and it's moving in the right direction, and it is a world leader. So I would definitely view it as more safe. If you were to go for an AI stock with, I think, potentially more upside, but as well more risk, you'd be looking at AIYY, which is the AI Option Income Strategy ETF. Same thing, does not directly invest in AI, the underlying company, but boasts a 101% dividend yield. Let's go down to their dividend distributions just to kind of check it out. You can see here they started off a bit high, and they had a period where they were slow in the past couple months, paying out 30-cent dividends, and then bumped it back up to 72.85 cents. Cool. So AIYY, the underlying stock, C3.AI. They're kind of interesting when comparing to NVDA. Nvidia invests, and their primary business is in like computer chips. Of course, that's, AI, but it's within phones, cars, and, the healthcare industry. But when we look at C3.AI, which is AIYY's underlying company, you could see that they're in, of course, manufacturing, but oil and gas, utilities. They're as well in healthcare, but more financial services, defense intelligence, transportation. And what I did was, to save you guys the time, I watched the documentary about Shell, where C3.AI uses AI technology for Shell companies. And I'm pretty sure we can see it. This is the one that I watched right here. And basically what they're doing is they're using AI softwares in order to make their business more safe, to predict disasters, and to avoid them. Eventually, this saves Shell a lot of money in the long run and could potentially save lives too. So that's kind of an idea of the application of AI within the oil and gas sector as well. I'm sure they do that for utilities, healthcare, retail. It's all about kind of predicting user trends and predicting what people are going to want in the future, because now AI is really being used to drive business growth. That is the purpose of AI. Companies are investing and they're looking to adapt AI into their own businesses in order to give them the best results from data collected over years and years of doing business. And I think that's really cool. I think it's also kind of creepy, but I think it's pretty cool. And when we look at the stock price chart of C3.ai, we can see here it's had a really good run up over the past little while. We've seen it had a run up here back in March of 2024 and just completely trended down through that period. And then we see here we are currently kind of facing a little bit of resistance over the past month as we hit a pretty big high at $45, dropped all the way back down to 38. And it's kind of rocky where we're at right now, down 8.5% in the day. So you could see here, when we look at these two companies, Nvidia as well has huge price movements day to day, but C3.ai, in my opinion, is a lot more volatile. Does this work for a Yieldmax strategy? I don't think so personally. You could see here that it looks like Yieldmax pretty much opened AIYY at the height of C3.ai's previous share price at, when we go to March 2024, we can see here March 2024. Okay, so it looks like they opened it about maybe this marker here when they were trading at about $30. But of course, this huge downside didn't play well for AIYY, and it has completely trended down over the existence of their Yieldmax ETF. Now, one thing to think about is this is back like late April, mid-April to May. You can see here that their stock price was trading at about $11.50. Today, they're trading at $10.20. This means that over that course, that time period, you could have roughly been earning, let's say, about a 60 to 70% dividend yield and pretty much kept your same capital appreciation, which I think is not bad for AIYY. But that also comes with the fact that AIYY has had a huge run up recently. So for the majority of time, you were likely negative on this position. Now, when we look at their underlying kind of financials, you can see here that they're a company that is struggling, in my personal opinion. When we look at their total revenue is growing. It's looking pretty good. They're growing year over year. You got to remember that this is only a $4.8 billion company. You're comparing apples to oranges here. A $3.4 trillion company compared to a $4.8 billion company. That's a difference of 100 times, 1,000 times. I'm not even sure what the difference is, but it's a very big difference. So this is obviously a lot smaller of a company. It could potentially be a lot riskier because I believe it's still kind of in its growing phase, where compared to Nvidia, it's more established. But when we look at their total revenue is growing very well. The cost of revenue, of course, growing with that. Their gross profits kind of staying about the same, so not necessarily making much more, and their operating income is actually getting worse year over year. What's the reason for that? I believe it's due to reinvesting in their business. Of course, they're kind of a younger business. You can see here they had in 2021 a huge year of reinvesting, and as well in 2024 they pretty much reinvested their entire negative operating cash flow, which is interesting. You can see they're currently cash flow negative. When we go to their balance sheet, we can kind of see if they have any cash on hand. We look at their total assets, trending about $1 billion and not moving from there over the past 4 years, staying the same, which is not what we like to see. So AIYY, in my opinion, is a definitely riskier investment. Their total debt is only about $3 million, I think. Let's see what that is. Yeah, about $3 million. That's not big for total debt. That's very small, so that's good. Of course, a company with more debt can kind of bring upon like more worry in terms of investors, so that's a good sign to see. But they're definitely a riskier investment, in my opinion. C3.ai still has to really prove themselves in the space. They are a $5 billion company. They've done very well, but if they want to be anything close to NVDA, they need to first prove their business model to investors. They need to expand their business. And I do think they're doing a great job of that with their products and with the spaces that they're in. Time will tell how they will perform. But in terms of a Yieldmax ETF, they have performed very poorly, down 50%. But could that change? Absolutely. And NVDY, could it continue its growth? I'm not necessarily sure. I think that NVDY could potentially be at a decently high point. It's going to be interesting to see how investors react because these two ETFs are at such different spaces, even though they're in the same sector. You have one which is a absolute giant, and you have one kind of, in my opinion, which is 15 years behind. It's just kind of in its startup phase. So will AI catch up to Nvidia? I guess we'll have to see in the future. In my personal opinion, which one would I look to buy currently? I'd probably look to buy NVDY just due to the fact that it's much safer, and it could potentially offer me great dividends and a stable-ish share price. But I do believe AIYY, with the current price point that it's at, with the business and the point where it's at, it definitely could offer a lot more return, but for a decent amount of risk. So you kind of have to weigh that balance there. So this is just my opinion talking about two AI ETFs, which both pay high dividend yields. If you guys enjoyed this video, found it valuable, we're up to 6,512 subscribers. Give this video a like if you guys enjoyed. Subscribe to the channel if you want to see more content like this. And subscribe and like this video if you think that I did a better job at kind of controlling myself, flipping through all these slides, not going so crazy. So I want to appreciate you guys sticking around to the end of this video. Thank you very much for watching, and I hope to see you guys in the next video.